Hello, everyone. It's Lisa Patterson with Daniel Ravenel, Sotheby's International Realty in beautiful Charleston, South Carolina. And I'm joined by Jennifer Flanagin of Case Law. Hey, Jennifer, thanks for doing this again. And today we are going to talk about different types of loans and how it affects your properties when you go to sell them. The biggest one we're going to talk about is secured and unsecured loans that you have on your property. And Jennifer, I know I come across this a lot, especially when people go get a HELOC and maybe they still have money on that and they haven't used it at all, but it's still hanging around out there, and they need to know they need to close that out. They do need to report on their welcome letter from their closing attorney all of these mortgages that they have, because it, as you know, it can cause a problem.
Yeah, that's exactly right, Lisa. And one thing, and we talked about this before in one of our earlier sessions. We talked about the role of a seller's attorney in a transaction and the role of a buyer's attorney. And one thing that I don't know that we really clarified, but it's really important, the seller's attorney does not do a title search. That is done by the buyer's attorney. The buyer's attorney orders the title search, reviews the title, prepares the title commitment. That all comes from the buyer's attorney. So when the buyer's attorney, and oftentimes when you pull title, especially right now, because courthouses are still limiting the number of people who are allowed in, title's taken a lot longer than it has in the past. And so oftentimes, the buyer's attorney is not going to get title back for a week or two before closing. And in the meantime, when they get title back, it will show them all of the liens that are affecting the property. And again, just to clarify, liens, that is any monetary, I want to say lien, but that's not, I don't want to just use the word to define it, but it's any kind of monetary statement that is attached to the property. And when we say attached, we mean that it is recorded, it is affected by the property. The holder of that lien has certain rights in the property, namely, generally, that if the owner does not pay back the lien, they can proceed with foreclosure, or they can proceed with a judgment filed against them, or a civil action, or many different routes that they may go down. And so when the abstract is pulled, the title search is pulled, it'll show all of the liens that are affecting that property. So that could be mortgages, that could be judgments, that could be civil actions filed against the party. It could be mechanics liens. So any of these things, tax liens, would recorded with that buyer's name is going to immediately attach to that property in the county. And so I think some things that sometimes what's confusing to people, to sellers, is they don't understand that if we represent the seller, we don't get any of that title information up front. That goes directly to the buyer's attorney. And when they are able to review it, they will send us an email saying, hey, our title search revealed 3 mortgages on the property. Can you provide 3 payoffs? Or, hey, our title search revealed, 4 tax liens. Can you provide a non-ID affidavit stating that your seller is not the same listed in these tax liens, or provide a payoff for these? And so that will come from the buyer's attorney eventually. But when we send out our initial welcome letter to our client, to the seller, on day 1 or day 2, or after receiving the contract, we have no information. We have no idea if there's an HOA. We have no idea how many mortgages you have on the property. We don't have any of that information. We rely exclusively on the seller to disclose that to us. We don't know. And so it is really 100% up to the seller to disclose any known liens that are on the property. And generally, they should know if they have any mortgages on the property. They've been making payoffs. They've been making payments. They went to an attorney to get the mortgage. And as you mentioned, the biggest thing that and usually people know that, they know they have a mortgage, they send the monthly payments, they know that. But oftentimes what people don't realize is that they have an equity line or a line of credit on the property. And a line of credit, an equity line, is a secured lien. That means it has to be secured by real property. So it has to be it has to be recorded, and it's going to attach to the property that it secures. And the reason it's secured by real property is for the bank to have leverage, right? They need something to foreclose on if you don't pay them back. They need to have something there that they're able to take. And so it's going to be the property. And oftentimes people will take out an equity line, maybe use it to redo the kitchen or bathrooms or something, and they'll pay it off, but they'll keep it open because why not? They may need it down the road, and they'll totally forget about it. No payments are made, no statements are sent, and they completely forget about it. But that is still an open mortgage associated and affecting this property. And so if you have ever gotten a line of credit or an equity line, any mortgage, first mortgage, second mortgage, anything like that, you gotta disclose that to us. You gotta tell your attorney. We will have no other way to find out until we hear from the buyer's attorney way down the road that, oh, hey, by the way, we just found, 3 mortgages on the property. And then we tell our seller, and they're like, oh yeah, well, I do have this equity line. Yeah, that's what we need to know. We need to know the equity lines. That's secured by the property. You mentioned secured, unsecured. So an unsecured, is a personal loan. You go out and you get a personal loan. It's not secured by any property. You don't have a mortgage recorded with the county. That's unsecured. We don't need to know that. We just need to know the loans that are secured by this property. That's what has to be paid off, because those continue to be liens on the property. So that's what we're most concerned about. The second thing that you want to keep, let's say you've owned the house for many years and you've refinanced a couple of times. That information from your refinance, at your refinance, you would have paid off a loan. Very often, those lenders don't ever file a release with the county. Very often, unfortunately. And so it's your loan. And in that case, title insurance can't help you. You have to provide your loan information, your loan number, and the servicer who you had been paying, or your settlement statement, the attorney you closed with, something that we can go and track down that release. Because if you don't have that information, you're going to have a real title problem on your hands, because it's your loan that you had, and it's got to be paid off or released at closing. And so, one big piece of advice I always give is anytime you pay off a loan, keep that information. Keep your loan number, keep your payoff statement, keep the settlement statement from the refinance, keep all that stuff, because it really may come back to be useful down the road.
I tell people to keep all that. And another thing you can do when you get that, because I've done this before, get in touch. You get that free credit report that you can do once a year. And I've actually sent that document into the credit reporting bureaus, and then they will handle it from there, make sure it shows up and it's on your credit report is paid. So that's helpful as well. And the other thing, when you're talking about the equity lines, people don't realize that even if that hasn't been closed and it's out there, and you don't owe, you say you've never used the money or you've paid it back and you have $100,000 kind of hanging around out there, that shows up at the very end of your credit report. And it just shows up there. And a lot of times people don't catch it. Like you said, they forget about it. They don't remember. You need to close that out when you're selling your house, because it will show up. I've had it show up with a lot of people that have had it paid off for years.
Yeah. And from a real estate standpoint, it's still a lien with the county. It's going to show up on the title search as an open lien. And so we have to request a payoff for that, to close that equity line, which oftentimes there is something that the bank is going to charge to close it, usually a release fee, because they are responsible for filing the release with the county. So they'll usually charge you for that. And it's usually not much, $10 or whatever, but we have to have a statement showing that this is going to be paid off and it's going to be closed, and in order to sell your house or refinance it. And
another one that shows up a lot, I'm sure you see this. Let's say you have a trust fund, you've borrowed against your trust fund. They can actually record that as well. Or let's say you got your, I did this on my very first house. My grandfather gave me the money to buy it, but he drew it up just like I was going to the bank, and it was recorded at the courthouse. So even those, you have to remember those and provide that information as well.
Yeah, absolutely. Anything you're aware, because again, we don't know. We, as your attorney, as the seller's attorney, we don't get any of that information. We are 100% reliant on you as the homeowner, to tell us what you have, what liens you have on your property. And one other note about equity lines, which has happened, obviously you can make draws from them, but they are secured by this property. So as we get close to closing, really once you're under contract, you need to not make any more draws on that equity line, because we are going to be requesting a payoff, and that payoff needs to be accurate. And it has happened in the past where we've requested a payoff a few days before closing, and the day before closing, the people go out and they buy a whole new furniture set for their new home they're buying, and we don't request a new payoff the day of closing. And so we have our old payoff, we send it in, and we're get a call the next day from the bank saying, hey, your payoff's short. Well, no, it's not. We have your payoff statement right here. Oh, well, yeah, but then they went and took another draw the next day. Oh, okay. Yeah. So no draws on your equity line once you're under contract. That's it. That's done. You got to not touch it, because that is.
Yeah, a lot of people think, well, I didn't use that money for my house, it doesn't count. Well, it counts.
Yeah, exactly. It does not matter if you are using it to pay off credit cards or to, buy a gift for your grandmama. It does not matter. It is secured by the house. And as long as it is secured by the house, it does not matter what you do with the money. It's still going to be a lien on the property that has to be paid off in full at closing. Doesn't matter if you never used it on the house. Yeah, exactly.
Well, this is goes back into what we've talked about before previously, people getting title insurance on both sides, not just for the lender, but getting title insurance.
Exactly. And so I did want to talk about that just briefly. I know we talked about in the past, but just as kind of a differentiating point. So when someone gets title insurance, it's going to protect them kind of from here backwards, right? So it's for anything that happened before you took ownership in the property. It also protects you against certain things that happen in the future. For instance, fraud. It's going to cover you against future fraud. So someone fraudulently added a mortgage during your ownership, it would cover that. But primarily it's going to cover what happened in the past. So, if you buy the house, and this is what oftentimes comes up, you buy the house and at closing, the seller's mortgage is paid off, and then it's just never released with the county. And so that does happen. And in that instance, your title insurance policy is very helpful, because your title insurance policy is going to show that was paid off at closing. And it's going to show that is not an exception for title insurance coverage. And your title insurer will typically deal with it, and you can move forward with your sale or your refinance or whatever. The issue is if it's your mortgage, right? So you bought the house in 2000, you got a mortgage out in 2000 in 2000 when you bought it, you paid it off in 03 by a refinance, you got another mortgage, you pay that one off in 06, got another mortgage, you got an equity line in 2010, and in 2020, you're trying to sell the house. Well, you got 3 mortgages on the property. Those other 2 that you paid off in 03 and 06 were never released. So now title insurance is not going to help you, because they really are yours. It's not in the past. This is during your ownership. It wasn't fraudulent. You really did take out these mortgages, and it's your responsibility to get those cleared up. You got to provide the loan number, information about your servicer, if you can show any proof that it was paid off, all that kind of stuff.
Right.
So that's what's important.
And that with this title insurance too, also, as we sell these properties, and there's always repairs and things like that getting done. And that's why I always request that the seller provide me with invoices showing that they're paid. I always send those over to you, and you're the closing attorney, so we have those on file, because that is the big point right there. If they do not get paid, that's when a mechanics lien can be put on that property.
Exactly. And the reason why mechanics liens and title insurance would cover that. Title insurance would cover mechanics liens. But yes, I mean, of course, we want to make sure that that doesn't happen. Because the slippery thing about mechanics liens is that the statute allows them to be filed up to 90 days beyond the date of the last day of the month that work was done. So this allows, you buy a house right now, they have until February to file their mechanics lien.
Mhm.
And so end of February. So, I mean, they have a while to get that on. Meanwhile, you own the house. All of a sudden you got a mechanics lien on your house. Which again, title insurance will cover it, but it's just a pain. Nobody wants to deal with that. So
Right.
Mechanics liens are a big thing. And that's also, and I think we did touch on this earlier, at some point earlier, if you buy from a builder, super important to get title insurance. A lot of people are like, oh, well, it's just land. It was land. Nobody's ever lived here before. Well, first of all, somebody did own the land. So, and it was subdivided and all that. The second of all, mechanics liens. That's the biggest, risk you have when buying from a builder is mechanics liens. So you want to get that.
And that goes back to another thing. When you get to these repairs, it's always best to either just take a credit and do your repairs later.
Yeah.
Or if you're the seller and you do want to do the repairs, just have those contractors paid out of the closing. That way it's clean. Everybody knows everyone got paid. We don't have to worry about that down the road.
Yeah.
The credit's the best, cleanest way though.
Yeah, I agree. And I think the credit's always the easiest, because then the buyer can do it. Not only can they make sure they get paid, but they can also select who they want to use and make sure the work gets done to their satisfaction.
Yeah.
Yeah.
So anything else you want to add to this?
I'm trying to think. I mean, the biggest thing are those equity lines. That's the biggest stumbling block that I see, are the equity lines. People forget about them. They don't report them. And then they use them before closing, not realizing that they're secured by this property. So that's just the biggest thing, is with equity lines. I would just say, be very, keep your records and just know that we got to pay them off.
Exactly.
Yeah.
All righty. Well, if anyone ever has any questions, they need information about anything in the Charleston market, you can give myself a call or Jennifer. Jennifer, I appreciate it as always. I'll talk to you soon.
Thanks, Lisa.
Bye.
Okay.